Hello, hope you guys are doing good. I have already highlighted almost everything there is here just to keep this video short and straightforward. Now let's get into it. We have relative equal lows here, then price rallied to the upside. We can clearly see that we have been in a bullish market because it is characterized by higher highs and higher low. We have our higher high and our higher low all the way to this area here where price got rejected. So from this high we had a drop and this internal area that rather got respected and price rallied to the upside, slightly dropped and pushed until it got a loss of momentum here. We have a loss of momentum. Then we dropped, created this swing low here. We have our swing low in this bullish trend because we are still looking at the bullish trend, but this swing low here, we're just trying to gather all the information we get here. We can clearly see that the swing low happened because price respected the fair value gap here. We have a fair value gap here. Let me just highlight it. We have a fair value gap here. This should be our FVG. We have a fair value gap here. Now, this fair value gap drove price to the upside and initially broke this and mitigated the rejection block here, Now let me just drag the chart. After the rejection block mitigation, price started to drop. We dropped and cleared the swing low here, which created a shift in structure. Let me just try to draw a trend line so you guys can have a clear look. Let me just try to draw a trend line here so that you can see we have a clear shift. Now that we have the swing low taken, we are looking at a bearish market. We are moving from bullish to bearish. Yet another significant area was created here, which is our unmitigated supply zone. Now, as we go down, we can see this low was created and then got broken. But before it got broken, price pushed slightly up to respect nor activate the immediate FVG here. We then slightly dropped and pushed aggressively to the upside to make a sweep because this fair value gap had some liquidity here. So price pushed up to collect the liquidity that was left there. We then dropped, broke below this structure and mitigated the FVG once again, then dropped. By the use of another trend line, you will see that we are indeed in a bearish market or a bearish trend. Let me just do this so you guys can get the idea of what I'm talking about. um it is a bearish trend because we have lower lows and lower highs, lower low, lower high. And you can see that we have our first touch here and second touch here, ultimately our third touch. But the third touch is extended because the market had to provide us with a demand zone here. The market had to provide us with a demand zone here. Now the whole idea here is for price to, let me use this, is for price to let me do this, then I'll explain it when I'm done. Yes, the whole idea here is for price to break above here, to close above this zone here, then drop. Let me highlight by using this path. We are looking for price to break above here, then drop to our unmitigated demand zone, then all the way to the supply zone, all the way to the supply zone. That's then we will be able to capitalize in the market. Let me just remove the trend lines so we can have a tidy chart. I love my charts clean. I love my charts clean. Oh, let me delete yet this one too. Now you can see that we should we break above this, then we expect price to drop to the demand zone. Then we can look for bullish entries. Now we are just analyzing and we don't like entirely control the market, so we'll see what happens from here. But I'll be more than happy should price come to this area because now I'll be entering a successful trade. And from this trade idea, we are looking to risk 15 pips in order to get 90 pips. So this is a 1:6 trade. Yeah, that's my insight on Euro USD. Hope you guys enjoyed and happy trading. Thank you.